It is 10:48 a.m. in New York, and the Asian markets have just finished a session defined by extreme volatility. Tokyo and Seoul initially exploded out of the gate, attempting to catch up to yesterday's U.S. rally, but the momentum faded significantly by the closing bell. The Nikkei 225 finished the day at 52,252, up 1.43%. While that looks like a strong gain, it is a far cry from the 2% surge we saw in the opening hour. In South Korea, the KOSPI managed to hold on to a 2.7% gain, closing at 5,553, largely driven by local retail investors buying the dip on hopes of a diplomatic breakthrough. However, the story in Hong Kong was much more sober. The Hang Seng struggled to maintain its footing as reports surfaced that Saudi Arabia and the UAE are moving closer to joining the coalition against Iran. The message from the Asian close is clear. The markets are desperate for peace, but they are terrified that the 5-day window is nothing more than a tactical pause before a much larger storm. Switching focus to the U.S., the opening hour of trading today has been a cold shower for those expecting a continuation of yesterday's euphoria. As of 10:48 a.m. Eastern Standard Time, the Dow Jones is down 185 points, and the Nasdaq has slipped 0.6%. The primary driver of this reversal is the credibility gap. Despite President Trump's claims of productive secret talks, we have had zero confirmation from any neutral intermediaries. In fact, Democratic Senator Chris Van Hollen has just gone on the record accusing the president of fabricating the negotiations entirely to manipulate energy prices. The oil market is already voting with its feet. Brent Crude, which dipped below $100 yesterday, has surged 3% this morning and is currently trading at $103 per barrel. When oil and stocks move in opposite directions like this, it's a sign that the safe haven trade is back. Investors are pulling money out of equities and putting it back into energy and defense as the 5-day clock continues to tick toward Friday's deadline. As we head into the heart of the New York session at 10:48 a.m., your trading strategy needs to pivot from growth to survival. We are currently 20 hours into the 120-hour postponement window, and the market is demanding a proof of life for these negotiations. If we do not see a verified diplomatic move by the time the London markets close today, expect the U.S. sell-off to accelerate. Watch the $105 level on Brent Crude very closely. If we breach that, today's stock market losses will likely double by the closing bell. Additionally, keep an eye on the 10-year Treasury yield. It's currently creeping higher as inflation fears from rising oil prices outweigh the peace narrative. The bottom line at 10:48 a.m. The Trump pump has officially stalled. We are in a vacuum of information, and in this market, no news is very bad news. Stay liquid, protect your gains from yesterday, and be prepared for a volatile afternoon as the liar's premium begins to reprice itself into the global economy.